Welcome to the Kindle Report. As we look back on yesterday, ended up to be a consolidation day. We did see an early surge in the markets, but everything fell back to close up just moderately with the exception of the NASDAQ. The S&P was up 0.3, NASDAQ down 0.5, and the Russell up 0.5. And one of the things I will cover tonight is that NASDAQ Russell spread. I mentioned that it's possible that we're going to start setting up a bottom in that spread, that we will eventually see the Russell come back into favor again. But for now, I still expect to see the NASDAQ come back and fight back into this game. I don't see a new high from a spread standpoint, and I'll discuss that here in just a few minutes in the technical section. But as we look to today, we really have nothing coming out. We have factory orders, which really no one cares about, expected to be up 0.8. But also, as we look back on yesterday, we did see the ISM, which is the ISM manufacturing numbers, come in way lower. They came in at 60.7. Expectations are around 65 to 66, so that was a big miss. But markets didn't seem to really care a lot about it until late in the session when we saw some profit taking. The cyclical energy was up 2.9, materials up 1.5, and industrials up 1.0. We're starting to see some emergence of the reopen trade, but as I mentioned in last night's video, I do expect to see the employment numbers start to stall out. Not for a while yet. We probably have another 2 months of improving employment. Then I think we hit the wall as we come in toward the fourth quarter. So we'll see how that all starts to play out. We're really into that pre-market ahead of the ADP numbers on Wednesday and Thursday's employment and Friday's numbers. So we're going to be looking forward. The thing that we do have coming out today is 310 earnings reports. We have Pfizer, T-Mobile, CVS. Those are the key ones we're looking at. Also, Conoco is coming out, and this is likely to be watched fairly closely. There's plenty coming out, as I mentioned, 310 of them, so that will drive the market sentiment more than any economic reports that are going to come out today. So I do expect to see some consolidation. And going back and talking about that RXT sell signal we got 3 days ago now, we did see a little bit of a rally on the S&P back above 4,200 briefly, closed back down, and it looks like we're going to see some more sideways before the markets actually start to move in any directional move. So we're still in that choppy sideways range. I don't see that we're going to break down below some of the key support levels, which I'll cover also in the technical section. As I mentioned, Tuesday is likely to be more of a consolidation level, and we're really looking to our database. We did see a fair amount of selling, but the database is still stable, and I'll go through those details here in just a few minutes. But as we come into Tuesday, expect not a lot of activity or a lot of VIG, as I always talk about, not a lot of volatility. So we're seeing some of the daily volatility start to come back in again. We saw a bit of an expansion, but we're coming back in. So let's go ahead and take a look at the charts and see how they're set up for Tuesday. As we begin with the WaveTech Database, we'll notice that there were 1,097 sell signals, 553 buy signals, so there's a bit of rotation going on here yet. The bullish percent is down to 60.05, so it's remaining well above that 58% number I discussed last night, and I suspect this will continue. With my expectations of the markets trading sideways, I expect some churning up here and some further rotation as the markets get set to move to the next level higher. But the configuration on the database remains very positive overall, and I don't see any big downside at the moment. Unless we drop below that 58%, then that will present some sort of risk. As I begin with the S&P futures, the futures are down 7.25 on the session. We're continuing to hover just above the 10-period moving average, which is currently 41.74. The low has been 41.71 overnight. Last trade, 41.78. I continue to expect to see the market remain above the key support level, which is 41.46, which is the 21 period moving average. Even though we're seeing some loss of momentum on the 21, PPM1 has actually turned up through its first derivative, which is a positive sign. As long as we remain above 41.46, we're likely to see the markets continue to move higher. As we look at the market grid for today, the S2 number 4169, R1 4193. So my guess is that we'll see an S2 R2 number today, which will put us back toward the 4202 number. As long as we hold the S2 number, we should see a rebound and the markets move higher during the session tomorrow. As we look at the SPX, same scenario. We're staying above the 10-day moving average at 41.76. The close was 41.92, so that is going to be the key support number. Extreme support in this pattern right now is the 21 at 41.49. I really don't see a big probability of us getting down to that number. The PPMs are still illustrating that trend. The PPMs are still illustrating that trend maintenance type formation. We should see the S&P continue to rise within the constraints of the 10 and 21-day moving averages. If there is any weakness, the 21-day moving average will be the key number to watch. Next market that I'll cover is the Russell. The Russell continues to stay just above its moving averages. They're all basically clustered right in a very tight area. The 10-period moving average at 2300, 2258, and 2236. So there's substantial support in these ranges. You see that PPM1 is turning up. This is suggesting we're going to remain in the constraint of these moving averages. I don't see us getting below the 2258 level or even getting down towards 2236. That would be only about a 30% probability for that to happen. As in the S&P, we're seeing the PPMs in a trend maintenance mode, which is a very low level trend. Let's take a look at the spread chart. And as I mentioned in the opening comments, I don't see that the Russell is going to come back and start to make new highs. This spread peaked out back on March the 12th. It's been under pressure for most of the time. We're starting to see it come back in. We're likely to climb back about 50%, and then we should see some consolidation. Did not mention this in the opening comments, but for the markets to move substantially higher, we're going to have to see this trade start to come back online, but I don't see that happening for at least 2 to 3, as many as 6 weeks. So this pattern is likely to remain somewhat subdued from the spread viewpoint. That does not mean that the markets won't be moving higher during this period. The next market I'll cover is the NASDAQ. NASDAQ is under pressure again tonight, down 26 handles right now at 13,764. As we look at the market grid for today, S1 is 13,746, the low's been 13,723, so we're just below, traded below that. We have now bounced back above it, and now it looks like we're a possibility of seeing an S1 R2. The key levels to watch here are going to be the 10 and 21-day moving averages. Now the NASDAQ is trading below those levels. PPM1 is trying to turn up. If it gets through its first derivative today, this will be a positive sign, but we're going to need to see this market get back above that 1881, 1851 levels over the next couple sessions. We could see further downside pressure. I do expect it to stay within the market grid range. For today, as I mentioned, S1 R2 would be the expectation. The final market that I'll cover tonight is gold. Gold was able to get an RTX sell signal yesterday. The RTX number was the 1789.80. We closed at 1791.80. We printed as high as 1798, right toward that 1800 level I've been talking about. So we are seeing a little bit of pressure overnight. We're down 660 at 1785.30. As we look at the market grid for today, overnight we're seeing the market trade down just below the S1 number at 1785.60 with a low of 1783. The high's been 1793, R1 1798, which is virtually the high of yesterday. So if we did get above R1, we would see a move toward the 1804 level. But since we did have the RTX sell signal, I would expect to see the possibility of printing down to an S2 and staying between S1 and S2. In looking at this market grid for today, R1, S1 will be your pivot numbers. If we get down below the lows of the night at 1783, then we could see further downside, but the expectation is that we will see an R2 for today. So look for S1, R2. This will complete the video for tonight. Thank you for watching. We'll talk to you tomorrow night. Hi, my name is Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special, and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks, and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over will get you to cash and out of harm's way. It's very simple from here. It's just sign up, click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now, just click the link below.